I know we have a lot to cover, so I'm going to go ahead and get started and assume some folks will still be trickling in. Hello and welcome to today's Community Resilience Chat on Local Dollars, Local Cents. My name is Marissa Momart and I'll be your host. Community Resilience Chats are a joint project between the Post-Carbon Institute, Transition US, and Chelsea Green Publishing. One piece of our respective efforts to redesign and relocalize our food, energy, and economic systems. The focus of today's chat is local investing and community capital raising. What opportunities exist to shift our money out of Wall Street and into the local economy? We're lucky to have with us today Jenny Casson of Cutting Edge Capital and Dan Rosenberg of Real Pickles, two entrepreneurs and rock stars in the new economy movement. Jenny Casson is the CEO of Cutting Edge Capital, a consulting firm that helps small businesses and social enterprises unlock the potential of compliant capital raising strategies, as well as create and use capital market tools like investment funds, secondary markets, and market-based regulatory strategies. Jenny has over 18 years of experience as an attorney for and creator of social enterprises. She has raised funds for and launched a public space cleaning and maintenance business, a landscapers cooperative, and a public market. Jenny has extensive experience with direct public offerings, nonprofit, for-profit joint ventures, cooperatives, and creative financing tools. Jenny's written extensively on local investing, community capital raising, and securities law, and you can find a wealth of her work on the Cutting Edge Capital website. Some of it's also featured in the book Local Dollars, Local Cents. And last but not least, we're also very grateful that Jenny is a board member of the Post-Carbon Institute. Dan Rosenberg is the founder of Real Pickles, a worker-owned cooperative in Greenfield, Massachusetts that makes raw fermented pickled products. Dan started pickling in 1999 and started Real Pickles in 2001. Since then, the business has grown steadily but remains true to Dan's commitment to human and ecological health. Real Pickles is not only a community capital success story, but a model of what it looks like to establish a business that is sustainable in every way. I'm going to let Dan tell you the rest of the story, but will say that it has been a challenge for me as a pickle lover to organize this webinar knowing that Dan's pickles are only available in his regional food shed and I may never have the opportunity to taste them. Today we're going to start with a presentation from Jenny on the state of local investing and strategies for small businesses and social enterprises to raise community capital, and then turn it over to Dan to learn how Real Pickles has raised $500,000 over the course of 2 months through a community investment campaign to finance their transition to a worker-owned cooperative. Then we'll move into Q&A from the audience and wrap up around noon. At the end of the webinar, I'll share the discount code Chelsea Green has generously provided for those who want to purchase the book Local Dollars, Local Cents. And now over to Jenny to get us started. Hi. Can you hear me? Okay, great. Yes. Looks like my mic is on. And I didn't know we would have people joining us from other countries. That's amazing. And I just want to say that the work I do is very focused on U.S. law. So some of what I'll be talking about may not be exactly applicable to other countries, but I actually have been talking a lot lately to people from other countries that want to raise money from U.S. investors. And these tools are available to companies or nonprofits or whatever kind of organization in other countries that want to raise money from U.S. investors. So let's get started. So I just wanted to remind us of some things that we already know, that a vibrant small business sector, it leads to lower rates of mortality, obesity, and diabetes. You're more likely to talk to other people at farmers markets and neighborhood bookstores than you are at a big box store. When a Walmart moves in, there's a documented decline in civic participation, including voter turnout and the number of active nonprofit organizations. These are just some of the data points that we can find from the Institute of Local Self-Reliance and lots of other organizations that have made it really clear, as we all know instinctively, that our small, local, independent business sector is so important to our way of life and happiness and sustainability. So what can we do to support this sector? Of course, a lot of us know about buy local first efforts, but what I really like to focus on is where do we invest? I know a lot of us who have money to invest maybe in our retirement funds or just a little extra money we're putting aside. Oftentimes we don't invest local. And I'm going to talk about why that is and how we can start to change that. So in the beginning, people did invest in their own communities. You know, it was very, very common when people were starting a new business or building a new barn to ask your neighbors, friends, and family to invest money, skills, etc. But as time went on, it became more risky for this to continue to happen because some people took advantage of the situation and started offering investments that were very risky and maybe had no basis in reality. So investors needed protection, and the state started passing laws called securities laws. Kansas was the first. And I see some people are not hearing me, but hopefully most people are hearing me. I'm seeing that in the chat. Anyway, you can hear me, right, Marissa? Yes, okay, good. So anyway, Kansas adopted the first securities law in 1911, and the purpose of the law was actually to protect Kansas investors from people coming in from outside of the state and trying to get people to invest in these very speculative schemes. The whole purpose of this law was actually to keep money local in Kansas and support local investing. So what were these laws about? You know, why are they called securities laws? What is a security anyway? And of course, many of you know that as the state started to pass these laws, the federal government finally realized, maybe we need a federal law as well. After the 1929 stock market crash, there was a federal law passed also to protect people from securities scams. So there's actually both federal and state law governing these. So what is a security? It's a contract, transaction, or scheme where someone invests their money in a common enterprise and they're led to expect profits from the efforts of another person. So that's the federal definition. At the state level, most states also use that same definition, but in 15 states there's an even broader definition, and this is called the risk capital test, basically saying if you're putting your money at risk in any way, even if you're not being promised a return on your investment, it can still be a security. So basically it's a very broad definition in some states, and so many times people might be selling securities without even realizing it. So some examples of securities could be memberships in a co-op, preferred stock, common stock, notes, which are what you use when you're doing a loan. So if you're offering people an opportunity to loan you money, that's probably going to be a security. Pre-sale of anything for any product of a business or service when the business doesn't exist yet, that might be considered a security. So it is a very broad definition. So something to really be aware of, that when you're raising money for a business or even a nonprofit or any kind of venture, you might be dealing with securities laws. So the basic rules of securities are that you have to register the offering with the state and federal government before you can offer or sell this opportunity to invest. Registration means filing and getting approval for of an extensive document that you create. Now, of course, there are some exceptions to this rule. This registration requirement is what people do when they do what we call an initial public offering. But of course, lots of people raise money without doing that full registration process. So there are some exceptions to the rule, but a lot of the exceptions have to do with a certain type of investor. So it's called an accredited investor, and that's a person that has at least $1 million in net worth, excluding their primary residence, or $200,000 in annual income, or if it's an entity of some kind, $5 million in assets. So a lot of the exceptions to the rules of the securities requirements have to do with if you're only accepting investments from accredited investors. And that's because the laws assume that these people are better able to protect themselves than the regular folks. So the problem with this, of course, there's many, many problems with this, but this just shows one example of why this can be a problem. Only 1% of companies are funded by these kinds of investors. This shows it's VCs and angels, venture capitalists and angels. Those are basically the two types of accredited investors that invest in companies in the U.S. So what are the other 99% supposed to do? So, and because of these rules that make it a little bit more challenging to raise money from unaccredited investors, the vast majority of the population has almost all of their money invested in only half of the economy. So if you look at our economy as really two halves, the small independent business sector and the giant multinational publicly traded company sector, they actually really do make up about half each of the economy. But regular people, unaccredited investors, have almost all of their money invested in just that one half of the giant multinational publicly traded companies, because those are the companies that can afford to do that full securities registration that allows them to have, to be listed on a stock exchange, to have mutual funds. So it's a real mismatch of resources to the needs of the economy. So, I want to talk about one tool we've been using to try to address this problem, and we call it and others call it as well direct public offerings. And this shows Ben & Jerry because they actually did a direct public offering when they were still a young company. They offered an investment opportunity in their company to Vermont residents. So what is a DPO? So it's a very generic term. It can be used, it can mean a lot of different ways of dealing with the securities laws, but basically it's any offering that can legally be made to the public, so you can do public advertising. You can accept both accredited and unaccredited investors, and you can make the offering directly to investors. There's no middleman, although if you wanted to have some help from brokers, you certainly could, but generally speaking, you're going to go out and make that offering yourself to the people that love your company. How is it legal? So it is legal now. It's not used very much because people often don't realize that there are legal ways to do it. There's some exemptions from the federal registration requirement. This lists the 4 main ones that we use. I won't go into detail on those now since we're low on time, but if you have questions about the federal exemptions, I can talk about that. And then generally speaking, you'll register your offering at the state level. So you'll choose 1, 2, 3, 4 states where you want to do your offering, and you'll register it there. Here's some companies that have done direct public offerings. A couple examples of clients of ours that have done them. Arroyo Food Co-op in Southern California is doing one, and they're offering the opportunity for their members to loan them money. Farm Fresh to You is another client of ours that did that offered loans to their customer, or the opportunity to make loans to them, to their customers. And they have an interesting model. They actually pay the interest in credits towards their product. Quimper Mercantile offered common stock, so they actually sold equity in their company. They have over 1,000 investors. The minimum investment was $100, and that store has now opened thanks to their campaign. People's Community Market is a client of ours in Oakland that wants to open a brand new grocery store, and they've almost reached $1 million. They're offering preferred stock, non-voting preferred stock. Real Pickles is another great success story that we worked with, so Dan will talk about that. We also did one ourselves. We wanted to go through the process ourselves so we would really be able to understand it from our client's perspective. And we raised $150,000 using something we called revenue share agreements, which is really neither equity nor debt. It's just the right of our investors to receive a percentage of our revenues every year for 5 years. So there's a lot of flexibility in what you can offer: common stock, preferred stock, revenue share, loans. With, really it's an infinite number of combinations and possibilities. And of course, the great thing is you can figure out what's best for your situation. So also I want to mention that
some states have been adopting some new laws that actually provide an exemption for small offerings at the state level. So if you happen to be in one of these states, and usually the maximum is in the range of about $1 million, you may have an easier time in these states, some already and some soon, raising money from state residents if you're a business that's really focused within your particular state. So where do you find DPOs? We recently created a website called cuttingedgex.com, and you can go on there and see some examples of businesses that are currently raising money, businesses and nonprofits that are currently raising money using the direct public offering tool. Here's some examples of ones that are doing that. We only have 5 up there now, but we hope to have more soon, and hopefully we'll get to a point where we'll actually have ones in many, many different states that so people from all over the country can invest. Right now, if you're from any state other than California or Washington, the only one open to you would be the RSF social finance one, but we hope to change that soon. So then there's also a new law that was passed in April 5th, 2012. A nonprofit organization that I helped to co-found was very involved in getting the law passed. Unfortunately, as it went through the process, it changed quite a bit from what our original hope for it was. So we're still not quite sure how useful it will be because there's quite a lot of onerous aspects to it that look like they will be in place, and some we know will be in place. So basically, under this new law, when it goes into effect, you'll be able to raise money from the public, from both accredited and unaccredited investors, but you'll have to go through an intermediary. You won't be able to talk directly to your potential investor. You'll have to do everything through a website. Each investor can put in up to 5% of their annual income or net worth. And some of the problems with this are that you will have to have reviewed or audited financial statements if you're raising more than $100,000, and there's also some onerous reporting requirements. So we're currently in the comment period for the proposed rules, but a lot of these things are pretty set in stone by the statute that's passed. So we will see how useful this will be. I think you could potentially use both the DPO and this tool, or obviously choose the one that's best for you. The great thing about the Crowdfund Act is you will be able to do a nationwide offering. With the DPO, you do have to register state by state, but with the Crowdfund Act, you will be able to go nationwide. This chart compares different ways of raising capital from the public. I'm not going to go into it now, but this is available on our website, and we can talk about it more during the Q&A. There's another tool that people have been using which takes advantage of some other exemptions from the securities laws. Most states have some kind of exemption for private offerings. So if you're not doing public advertising and you're just talking privately to potential investors, there may be a good exemption in your state. And there's lots of investment clubs being set up to take advantage of those exemptions. But definitely make sure you check your state's rules before you do that. Also, investment clubs are another tool where because if you create an investment club, you set up an entity, a lot of times they're set up as a limited liability company, and you offer investments in the club, those actually won't be considered securities because all of the members in the club are actively involved in deciding what to invest in. And as you remember, one of the key parts of the definition of a security was being passive and letting someone else manage your money. So there are some investment clubs out there where they can accept both accredited and unaccredited investors because it's actually not considered a security. Of course, when the club goes out and invests in something, the thing they invest in has to comply with the securities laws. There are some co-op exemptions, so it's very good to be a co-op in some states if you want to raise money from your community. A lot of states have exemptions. These are just some examples of some of the exemptions. So, for example, in California, if I'm a co-op, I can raise up to $300 per co-op member for memberships in the co-op, whereas if I were not a co-op, I would have to do a full securities registration to do that. Organic Valley is an example of a co-op that took advantage of both state and federal exemptions. Farmer co-ops actually have really good exemptions. There's a federal exemption for farmer co-ops and lots of state exemptions. So Organic Valley is able to raise money from throughout the country quite easily without doing nearly as much compliance as many other types of businesses would have to. So I'm going to stop there, and I look forward to hearing your questions.
Thank you, Jenny. Let's turn it over to Dan.
Okay. Really appreciate the invitation to be part of this. Excited to be here. I will share a little bit about the Real Pickles story here, and then I'll focus in on the transition that we made to a worker-owned cooperative earlier this year and the DPO that we used to fund it. So I founded Real Pickles in 2001. My wife Addie Rose joined me a few years into it, and we've built up the business over that time, over the last 12 years. We make raw, naturally fermented pickles. Pickles in the broad sense, not just cucumbers, but sauerkrauts and pickled beets and ginger carrots, tomatillo hot sauce. Make about 11 or 12 products in total. We make our products entirely from locally and regionally grown certified organic vegetables. And I'll kind of go through some slides, show you some photos as I talk, and kind of get a visual sense of what our business looks like as well. So we are in business really for two reasons. I started the business for two reasons. One was to try to help bring traditional pickles back into the American diet, healthy traditional food. So that's raw fermented pickles as opposed to modern pickles made with vinegar and pasteurization. Something that kind of went by the wayside as the food system became industrialized, but feels like a food worth bringing back. So that's one part. The second part has been to promote, really kind of generally speaking, a new kind of food system, one that's locally, regionally oriented, organic, run by small businesses, less corporate, more democratic. And the central commitment of the business has been from the beginning to buy all of our ingredients locally or regionally from within the Northeast, and to sell all of our products only within the Northeast. And that's is a conscious philosophical choice that I made at the beginning of the business, really to promote this idea of a local, regional scale food system, and a commitment that we continue to stick with to this day. So basically we're processing we're buying all of our vegetables seasonally during the harvest season, summer and fall here in New England. And then we're stocking up for the year and selling our products year-round. And here's one at the farm, Sarah and Ryan from Red Fire Farm, farm just down the road from us. They're one of 6 farms that we make arrangements with each winter to buy all of our vegetables from. This year we're buying about 300,000 pounds of certified organic vegetables from local and regional farms. We operate out of a 6,500 square foot manufacturing facility. We started out in an incubator kitchen, and then 4 years ago outgrew that and bought our own building, outfitted it into an organic pickle facility. Did a ton of energy efficiency improvements, so it's very energy efficient. And a couple years later, we put a whole bunch of solar panels on the roof and made ourselves 100% solar powered, which we were really excited about. And we have a staff of about 15, and we could show you a couple shots of our production. These are cucumbers that we're getting in the summertime, stocking up for the year on cucumber pickles. And in the fall, in particular, we're focused on bringing in all the cabbages, carrots and beets, making those products, stocking up for the year. And we sell our products probably at about 350 or 400 stores throughout the Northeast. That number has kind of gradually increased over the years. The last few years we've been growing about 25% a year. We're at about 750,000 dollars in annual sales at this point. So it took probably 9-10 years to really get to the point where we finally felt like we'd reached a place of success, making a decent income as a business, feeling like Real Pickles was a healthy, self-sustaining business. And around that time, 2-3 years ago, my wife Addie and I essentially kind of stepped back and asked the question, what's the best way to ensure that our business would continue far into the future to succeed financially and also, really importantly, maintain its strong social mission. And as we know, huge number of successful natural food businesses, their path these days is to get bigger and bigger and then sell out to a big corporation. And that's something that we definitely did not want to do. So we deliberated quite a bit and thought about a lot of options and consulted with our staff. And eventually we decided that we really wanted to convert the business to a worker-owned cooperative. It had been a proprietorship for 12 years, and we decided we wanted to become a co-op. And 5 of us, including Addie and myself, decided that we were up for the commitment to do the work of helping to make the transition happen, be founding worker owners in the co-op, and agree to stick around at Real Pickles long enough to make sure that it worked. And so we then embarked on a pretty big project of making this transition happen. I'll mention first, put out there a few key reasons why we decided to go co-op. Just mention out loud, the first one there I think was really the most important for us. It was really important for us that we figure out a way to preserve our strong social mission that we had put into place for the business. And becoming a co-op really felt like a great opportunity, offered the opportunity to inscribe our guiding principles and our mission into the governing documents of the co-op and make them really hard to change. And so that was really the foremost reason, but there's a bunch of other good reasons, as you can see there as well. So there were a lot of details that we needed to work out to become a co-op. A key challenge was this question of where were we going to source the funds that were needed to purchase the business from Addie and myself, and also for operating capital, so the co-op could run the pickle business once it had made that purchase. So we went through pretty extensive valuation process, internal and external, working with some outside experts to determine what felt like a fair value for the business, essentially kind of prior year compensation for Addie and myself so that we could all move forward together as founding worker owners with no one kind of entitled to any more value in the business. So we decided that we needed to raise around $500,000. And so the question was, where were we going to come up with that money? So we realized, became aware pretty quickly that we weren't going to be able to come up with those kinds of funds from ourselves as a group of worker owners. So we really needed to look to outside funding. And we considered loans. We considered it would have been loans that would be subordinated to any bank loans that we had or would have, any operating capital. It would have been possible. It would have been challenging because in this case there wasn't a lot of collateral available. Most of the value of the business was in goodwill, the intangible brand value of the business. It also would have been pretty expensive money. And we were feeling cautious about having the co-op go that deeply into debt right at the outset. We also looked briefly at royalty financing, which is an option that would have been a little lower risk for us, but would have been really hugely expensive and had necessitated us growing as a business much more than we planned to. Part of one of our guiding principles is to stay a small business, so we didn't want to be forced into growing more than we had to. So eventually we settled on the idea of selling non-voting preferred stock to outside supporters of Real Pickles, to people in the community. And the idea came initially to us from connections we had to Equal Exchange, the fair trade coffee company, also based here in Massachusetts. They've been around for a long time and for I think a couple decades have used this means of selling non-voting preferred stock as a primary means of raising capital for themselves as a worker co-op. And So that idea really made sense to us because it felt like we were becoming a co-op in large part because we felt there was a social benefit. It would help preserve the social mission of the business. And so there was a community benefit. So it made sense to us that we might ask our community to share in some of the risk of doing this kind of transition. We decided that we would do a 4% target dividend, which meant that felt like that would be a reasonable return, financial return that we could offer our investors, and at the same time, that felt affordable to us. It was much more affordable than loans and certainly than royalty financing would have been. So once we decided to choose that path, we had the choice that essentially to sell that stock through a private offering or through a DPO, a direct public offering. And we knew at that point that we were going to want to hire Jenny to work with us on either. And so she helped us sort of sort through those two options. A private offering would have been cheaper and simpler, but it also we would be restricted in a number of investors that we could take on, and we would not have been able to advertise. And so in the end, we decided to do a direct public offering to try to sell our non-voting preferred stock. And the two main reasons I'd say, one is that Jenny mentioned that you can have an unlimited number of investors with a DPO, and that felt important to us because we wanted to make the investment as accessible as possible. It was still going to be an investment. It was, the minimum would still only be so low, but it could be much lower than if we had chosen a private offering and were restricted in the number of investors that we could take on to reach our $500,000 goal. So we ended up choosing a $2,500 minimum, which really necessitated, in our minds, doing the DPO. The other reason we chose the DPO was because we could advertise, and we decided that it felt like this was a really great marketing opportunity, an opportunity to tell our story of the co-op transition we were doing and talk about the social benefit of making that transition. And so both of those felt like really important pieces to us. So we hired Jenny to work with us. We filed in Massachusetts and Vermont. We chose 2 states. We did that back in September of 2012. And the biggest challenge, I would say, along the way was the waiting time once we had done our filing and the back and forth with the regulators. We had the Massachusetts state regulators were tough. They definitely had a lot of questions and comments for us, and there's a lot of back and forth, and it took about 5 months before they finally gave us the go-ahead. But it gave us time to really carefully craft our marketing campaign, which in the end felt really important. This is flyer, brochure, one of the marketing materials, investment materials that we used that had to be vetted by the regulators, and I don't know how well you can see it, but sort of lays out how we put together our messaging and a little bit about the basics of the investment terms and talking about why we decided to go co-op and what that would mean. And so, as I said, we really carefully crafted our marketing campaign. We focused pretty hard on the messaging and making sure we got that just right. We focused on the social value of what we were doing, talking about the investment as one that was providing a perhaps modest but still reasonable financial return paired with a very strong social return. That's kind of the way that we talked about it. We used our email lists pretty heavily that Real Pickles has developed over the years. We had about 1,800 people, 1,800 email addresses on our list. We sent out a big campaign announcement. Anyone who was on our list in Massachusetts or Vermont, the 2 states where we'd filed, we put them on a list to receive a biweekly campaign e-newsletter that told people what was going on with the campaign, and vignettes about the mission protection strategies we were choosing as a co-op, talking about public events. We definitely used Facebook as well. I think a hugely important piece was really just tapping into the network that we've built up as a business over the last 12 years. We met with a lot of community leaders in our area that we had connections with, asking them for campaign advice. They might not have run an investment campaign, but they'd run fundraising campaigns, and there felt like there was a lot of applicable advice there. We reached out individually to good prospects for investing. We asked other organizations to help spread the word. We also spread the word by putting out a big press release that got us 3 front-page newspaper articles in our area and a local public radio story, which those things definitely got us investments. We also tried to set up a lot of opportunities for people who might be interested in investing, to come meet with us face-to-face and ask questions and get to know us a little better. So we held a couple different public investor briefings. We organized some facility tours. Addie and I presented at the Slow Money meeting in Boston. We also made ourselves available as founding worker owners for kind of private one-on-one meetings with potential investors, giving them private tours, sitting down, answering their questions, making sure they got a chance to really vet us and get their questions answered. I'll mention you could, our website, realpickles.com, and specifically realpickles.com/invest has kind of the remnants of some of the materials we had up on the web at the time of our campaign. And one thing that is still there is, in particular, some links to blog posts that we put up during the campaign that was definitely part of the package for us. So in the end, our DPO felt extremely successful to us. It definitely beat our expectations. We raised the full $500,000 that we were looking to raise in about 2 months, really just a little under 2 months. We took on 77 investors in the end from Massachusetts and Vermont. It was a mix of individuals and businesses. Some of them were other co-ops that just wanted to support us. Some were co-ops that we work with, like food co-ops that sell our products. Other customers, suppliers. One of the farms that we work with became an investor in Real Pickles. And so once the funds were all raised, we, within a few weeks, finalized the paperwork with a local attorney here in Massachusetts that we have a history with. And we made the co-op transition on May 9th of this year. And we're really excited about it. It's been a great transition, and we're really happy to be a co-op. And I'll say we also are really happy that we chose to use the DPO. We're thrilled to have so many of our key community supporters as investors. It also felt like a really great test of the idea that people might be ready to go from buy local to invest local. At least in our area, there's been a lot of talk of that, but not necessarily a lot of opportunities for to really see if people would be actually prepared to make investments, and they definitely were. And I thought, looking back, I think the keys to our success with our DPO were really taking the time to carefully plan our campaign, crafting our messaging, and I think tapping into our strong network of supporters, and having fantastic legal advice in Jenny, for sure. So it all took a lot of work, but I would say it feels very rewarding to have our community committed and invested in our business in this way, having done this. So I think I'll leave it there.
Thank you, Dan. What a great story. I love hearing about all of your different community partners and folks you work with. Congratulations on making the workaround cooperative.
Thank you.
All right, I'd like to open it up to questions. We have about 20 minutes remaining. You can type your questions in the box that says Q&A on the top, and please keep them short if that's possible. And I'm going to read through and pull a few to share with Dan and Jenny to respond to. So let's start with this question from Jay. Is there any source to identify DPOs? He's looking specifically in Utah, but what kind of advice would you give on how to find DPOs to invest in?
That's a tough one. Unfortunately, they're a little hard to find. That's why we've created Cutting Edge X, to have a central place that you could find them, but it's hard to say. I don't know. I guess one thing you could possibly do is call your state, Google your state's name and then securities division, and you can call the people there, and they tend to be quite friendly and supportive. It's slow at times, as Stan found out, but they may be able to let you know if there's anything available. And I do have a client right now that's a school that's getting ready to offer a DPO in Utah. So hopefully we'll start to see more of these all over the country.
And we have kind of another similar question from Nancy asking how to find out Florida state laws where to begin, I think specifically with investing regulations. Do you have suggestions on where folks should look for information specific to their state?
Yeah, again, I would go to the website of your state securities division as a starting point. Unfortunately, some of them are really, really helpful, and the websites give a lot of detail on what you can and can't do and how to do things, and other websites don't have a lot. But again, I found that when you call them, they do tend to be pretty helpful. So that would be a good place to start. You can also try to research find that law in your state statute, and then actually try to read it. I don't know how easy it would be for people to understand it, but at least it would be a starting point to kind of start to understand what's okay in your state.
Okay, thank you. Tom is wondering of other types of co-ops. Specifically, are there examples of manufacturing cooperatives? He says food seems to be a common model for cooperatives, but what about other types of businesses?
It's true that a lot of our clients have ended up being in the food space, which is a bit of a coincidence, but probably in a way not that much of a coincidence because so many people are really passionate about their food. So it's a great industry to be in when you're wanting to get community investment. But there are other examples of other kinds of businesses using DPOs, all kinds. So we have clients in the energy space, a lot of service businesses. In terms of manufacturing, I can't think of an example right now, but there's absolutely no reason why any type of business couldn't use this tool as long as you have a compelling story and a potential community of people that you think would be interested in investing.
I'll just add that along the way, when we were doing our co-op transition, we looked pretty hard for models, particularly businesses that had transitioned from being a proprietorship to a co-op like we were doing, and we didn't find nearly as many models as we had hoped or thought. But there was actually one manufacturing business in Ohio that had made a transition. They got some press. I don't remember the name offhand, but I believe because the Ohio Employee Ownership Center gave them a lot of assistance. I think you might be able to find information about that business through their website. But we read a bit about their story and found it helpful in thinking about how to do our transition. So that's one. They seem to be with some kind of a manufacturing business, machine business.
Thanks, Dan. This is another question for you, a short one. Did all of your investors have to be from Massachusetts?
So all of our investors needed to be from either Massachusetts or Vermont because those were we needed to register in any state where we were going to get investors from. So ideally we wanted to, we sell throughout the Northeast, New England, New York, New Jersey, Pennsylvania. Ideally we would have been able to take investors from any of those states, but it would have been pretty expensive and complicated to file in all those different states. So we chose our home state and then Vermont, where we also felt like we had a good network and good support.
Great, thanks. A few people have asked about community currency, local currency, and how that can fit into the community investment campaigns. Have either of you worked at all with alternative or community currencies? Do you see a role for them in driving funding to the local economy?
I think that's a really important question. I do work a lot with people that are trying to promote community currencies, and I haven't quite yet made any connection between the two because I think community currencies are still quite challenged in the U.S., often because of some legal rules in the U.S. that make it a little bit difficult to have community currencies, but I think combining the tool of community investing with community currencies would be wonderful because I think we all can probably agree that the dollar has a lot of problems with it, and so you know when you're and we have to use dollars in our when we run businesses, so we have to deal with dollars now. But if we could just deal with a totally separate currency that was more supportive of community and use that currency to grow our businesses, that would be amazing. So I think it's something we should continue to work on.
Dan, did you have anything to add?
No, it's not something that we experienced any connections with, but it sounds like a pretty interesting. It would be great to be able to make that connection.
Okay, thanks. Jenny, a quick question. Do you work in all states?
I do.
Okay, so you might be getting contacted by some of our viewers today. Dan, with the seasonal nature of your business, are you able to keep people working year-round, and are there problems related to that?
Mm-hmm. It's a good question. There've been a lot of challenges associated with being a seasonal business. With a commitment to buying locally and regionally, stocking up for the year. Certainly, there've been some challenges with labor. As it happens, most of our products ferment for a matter of months before they need to be packaged up, and we can kind of manipulate the rate at which the fermentation takes place, changing the temperature in our warehouses. So we're actually, and the packaging of our product is pretty labor intensive. So we've been able to figure out a way to keep our staff and production staff employed year-round. And so it's a lot of processing vegetables in the summer and fall, and a little bit of packaging work, and then lots of packaging work through the winter and spring. So we are able to make that work.
Okay, this question is for you both from Joy. She says, Dan and Jen, both of you seem to focus on businesses that need a larger amount of money. What if a small business only needs something like $50,000? Going through registration lawyers takes a big chunk out of the loan that's needed. How can we circumvent high legal fees? I'm asking as someone who wants to invest via microloans in our local food system.
That's a tough one. It's a great question. That is a bit of a kind of a donut hole. It's a lot to raise in a crowdfunding campaign, the donation-based crowdfunding, but it is kind of a small amount to go through the legal hoops to be able to do a DPO. So it's a tough one. As I mentioned, there are some states that have these new laws or are getting ready to pass new laws, like Georgia is one. I have some clients in Georgia, and they have this law where it's actually quite easy. You don't have to do this full registration process like Dan had to do in Massachusetts. It's just like a really simple 2-page form as long as you meet certain minimal requirements. If you're raising up to $1 million and each investor is maxed out at I forget exactly how much. So there are some states that are starting to pass these laws to make it easier. So you may want to look into that. I have some links I could send to people who are interested in that and start lobbying to create that in your state. I think I'm a little nervous about these rules because they make it so easy that we could start to see, some bad things happening. I always have mixed feelings about wanting to make it easy, but also at the same time worrying that we're going to get into a situation where people will start to take advantage and people will start losing money and there will be fraud. So I have mixed feelings about these rules, but I know everyone on this call is going to do great things. So take advantage of these new laws if you happen to be in one of those states.
I'll just add that from our experience here, sort of thinking about that decision we were trying to make about once we knew we wanted to sell non-voting preferred stock, we went through that decision-making process between doing a private offering and a DPO. I think given our experience, we might have had some regret about choosing the DPO if we had been trying to raise less than maybe $200,000 or $250,000 because of just how much work it involved and how much time. I do gather from Jenny that we had a particularly challenging experience in terms of the regulators were pretty tough in Massachusetts. So, if in other places it's easier, that threshold might be different, and, it would depend on who it is. But for us, $500,000 felt totally worth it. Next time if we were raising, $100,000, we might think about trying to sell the same kind of stock but do it privately maybe.
Right, and there is a new rule. I didn't get a chance to talk about that chart that I put up, but there is a brand new rule called Rule 506C, as in cat, and that rule actually does, and if you comply with certain requirements, you can actually do public advertising to bring in, as long as you're only bringing in accredited investors. So if you think you might be able, like let's say there's, a whole bunch of rich people, you mentioned Texas, there's lots and lots of rich people in Texas, and you're trying to raise $60,000. You could possibly find 5 rich people in Texas that would want to invest, and you're allowed to do public advertising. So you don't necessarily have to know them. You could go find them by doing public advertising. So that's another tool you could consider using if you're trying to raise a small amount. Of course, when you have to keep it to just accredited investors, I have a lot of concerns about that because they often tend to drive a hard bargain. But you never know. You might find 5 really awesome, friendly, supportive, rich people that will give you a really great deal.
Great, thank you. All right, here's another question. In a world which is so networked financially and in terms of social media, et cetera, what do you think about how to define the local? I know the technical definition is 25, 50, or 100 miles, depending on where you are and what you're doing, but what is it that counts as local for this sort of investment?
Okay. So in terms of local investing, I tend to think about the definition of local in terms of, first and foremost, in terms of food and food distribution and consumption, and it played a big part in the decision I made about where Real Pickles would buy its vegetables from and where it would sell its vegetables. In my view, local, which maybe you would define as 50, 100 miles, something like that, is super important. It tends to be what a lot of folks who want to see the food system change, tends to be what they focus on sometimes exclusively. In my mind, it's just important to think regionally, which is why I chose all of the Northeast for our business. Then when it comes to investing, say in the context of Real Pickles, if we're a regional business, I would say what makes sense to me is to potentially seek investments, from throughout the Northeast. As it happened, it was a little too complicated and expensive to do that for us, so we just chose Massachusetts and Vermont. So I guess it kind of depends on the context in the particular business. But again, for food, I think regional is just as important to think about as local.
Jenny, do you want to respond to that at all?
Yeah, I think it doesn't make sense to be really strict. I think it does depend on the context. So I kind of, I don't have any strict rules in my mind about that issue.
Okay, we have many more questions and only about 5 minutes remaining. So a few people have been asking about, Jenny, I know you already responded to this briefly in the Q&A box, but where to find more resources related to self-directed IRAs if people are interested in shifting over their retirement funds into the local economy?
I'm not exactly sure. I know if you Google self-directed IRA and also the word custodian, you should find info about it. You're legally allowed to put as much of your retirement money as you want to in a self-directed IRA. And then once it's in a self-directed IRA, you have the right to direct those investments into anything you want. So you can use that money to invest in DPOs. I know that a lot of the you have to have it with a custodian, and a lot of the custodians out there don't have a great reputation. I've heard a lot of stories about them being really unresponsive and hard to deal with. There's one that I've heard of that has a little bit of a better reputation, whose name I cannot remember right now. Hopefully it'll come to me. If not, I can send it to the organizers to send out to everyone. Yeah, so finding a custodian that has reasonable fees and that has a pretty good reputation would be the place to start, and then they can tell you exactly what you need to do.
Thank you. Okay, Jen, I know you touched on this a bit already, but which methods have been most successful for promoting your DPO?
Which message? So I guess I would say the key, I think the key thing that we were focusing on, I don't know how well people can see that slide, sort of show some of the text. What we wrote at the top was, we're rewriting the standard storyline for a successful organic food business. We're staying small, independent, and locally owned, and we're converting to a worker-owned cooperative. And we put a lot of emphasis on, the preservation, the social mission preservation that was going to be happening by doing this co-op conversion. And I think that was really the number one thing. So I hope that answers the question. Did we lose Marissa?
So hello, this is Desiree. I'm the tech person, and we did lose Marissa. So if you wouldn't mind, you can both, there's a couple more questions that are in the chat box. If you check everyone, and you might want to check there and see if there's a question that one of you might take in there.
Sure. Should I take one, Jenny?
Yeah, you want to do that one about
So
ownership?
there's one, sure, trying to catch it all. How will ownership transfer to worker owners? What is the interface between non-voting stockholding investors and worker owners? How do the co-op bylaws interact with the DPO requirements? Okay. So how did ownership transfer to the worker owners? So what we did in the end was to form a new cooperative entity that Jenny helped us set it up. So we filed in the state of Massachusetts to organize a new worker-owned cooperative, and the 5 founding worker owners each paid in a member share. We set it at $6,000 each. Paid in a member share to become a worker owner, a member of the cooperative. And then the cooperative raised the funds. Officially, it was the new cooperative that did the DPO, and then it used those funds to purchase the business from the proprietorship, from Addie and myself. It acquired the assets of the business. And what is the interface between non-voting stockholding investors and worker owners? So basically, we're still trying to figure out exactly how we're doing it. We don't, the shareholders don't have a vote, so we don't have an official organized annual meeting. But basically, we're working out some, a plan and starting to implement it, where we're trying to keep our investors engaged and informed with what's going on in the business. We're going to send them an annual report. We'll be sending them their annual dividend check. And we just had an investor open house, a special public event on a Saturday where we invited our investors to come by and chat with us and find out what's going on. So mostly it's kind of informally, but we're working hard to make sure that there are lines of communication and ways for investors to stay engaged.
Hi, this is Desiree. It looks like we're at our time limit now, so I wanted to thank you both so very much for your time today. Really appreciate it, and let you each have just a few seconds to close out, and then we'll go ahead and post this online at resilience.org following the event.
Go ahead,
Jenny,
Leah.
why don't you do it first?
Okay. Okay. Yeah, I'm sorry we didn't get to a lot of the questions. Feel free to email me at jenny@cuttingedgecapital.com, and also check out our website, cuttingedgecapital.com. It has lots and lots of information on all of this stuff. And also cuttingedgex.com if you want to see some examples of currently open DPOs. And if you know of anyone that's doing a DPO that you think fits with the values of this community, let us know and we can list them on our website, cuttingedgex.com.
And I'll just say thank you for the invitation to be part of this. This was great. We're really happy that we did this DPO. We had a great experience working with Jenny. Feel free to check out our website and blog through realpickles.com. You can see some information left over from our campaign. And yeah, thanks again.
Thank you all. Have a great day. Take care.
Bye.